Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Investment blitz. U.S. President Donald Trump and Saudi Arabia's Crown Prince touting a planned $1 trillion of Saudi investment at a glitzy event in Riyadh with $600 billion already on the table. Doha, the next stop on the president's Middle East tour. Trump's Middle East visit also opening a floodgate of AI deals led by NVIDIA. Earnings from China's major tech firms, the next big focus for investors. Plus, President Trump vowing to lift U.S. sanctions on Syria, a boost to the country's ambitions of rejoining the international community. Well, hello again, everybody. It's just gone 8 a.m. across the Emirates, 7 a.m. over here in Riyadh in Saudi Arabia. As you can see, I am still here. We are tracking President Trump's movements around the GCC this week. What a major day yesterday. I was in the room when the Crown Prince and President Trump walked in, delivered those remarks. Very memorable speech. We're going to be talking about what exactly we learned from yesterday's events, not just on the commercial deal-making side with those big numbers being floated, but also when it comes to regional geopolitics. So lots to get through in this show. But for now, let's just go back and take a look at how these markets are faring, because ever since that détente announced over the weekend between China and the U.S., we actually even heard from the Treasury Secretary Scott Bessent at the Saudi-U.S. Investment Forum yesterday talking about that Geneva mechanism, the breakthrough. We have seen green on the screen for Wall Street. S&P futures today not doing a whole lot, trading sideways. NASDAQ similar amount, but we did see a big bounce yesterday. NASDAQ now fully erasing the losses for the year, and also big moves in the semiconductor space. NVIDIA gaining more than 7% after news of one of the deals that was inked between Saudi Arabia and the U.S., and that NVIDIA and AMD will be supplying one of the Saudi AI investment firms with chips to power up their own AI data centers. So big rally in the chip making space. And then oil, take a look at Brent. We're back at $66. We bounced 3% yesterday, again in reaction to President Trump's speech, where he was talking about Iran, and he said he wants to do a deal, but if a deal doesn't get done, then they will not hesitate to drive exports of oil down to zero again. Oil spiked up on the news. Okay, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we are seeing similarly the extension of gains in the Asia-Pacific for a fourth session. It's really this idea of the US-China trade truce and the cooling of geopolitical tensions, even after this 90-day reprieve, that neither side really wants to see tariffs at these extreme levels, 100+%, right? So that seems to be what investors are running on today. But chip stocks also tracking those gains in the US counterparts overnight. That's also what's fueling the climb in Asia stocks today. Now, amid still this uncertainty about the impact from tariffs on the economy and consumers, I think investors are focusing on what they know, the earnings, right? And we've seen this sense of resilience, particularly from Chinese tech companies, the likes of JD showing the fastest pace of growth in 3 years. Tencent expected to show a steady pace of growth when it reports later today as well. We also had Sony dropping in the past hour, and it missed in terms of forecast, but it did announce a share buybacks among the stocks we're keeping an eye on. Meantime, the renminbi today moving away from the 6-month highs that it hit just a day ago after the yuan fix from the PBOC today, supportive of the renminbi, but not quite what traders had been expecting. Jumana.
Avril, so it looks like the risk-on rally is continuing in the Asian session. Avril Hong in Singapore. Let's go back to our top story this morning. President Trump has spent his first day of his Middle East visit here in Riyadh, focused on the geopolitics of the region and touting investment deals.
Apple is investing $500 billion. NVIDIA is investing. TSMC is investing $200 billion. And with this trip, we're adding over $1 trillion more in terms of investment. I have never believed in having permanent enemies. I am different than a lot of people think. I don't like permanent enemies. If I can make a deal with Iran, I'll be very happy if we're going to make your region and the world a safer place. But if Iran's leadership rejects this olive branch and continues to attack their neighbors, then we will have no choice but to inflict massive maximum pressure I will be ordering the cessation of sanctions against Syria in order to give them a chance at greatness.
President Trump and Saudi Crown Prince Mohammed bin Salman announced a pledge for $1 trillion in commercial deals at their summit in Riyadh. The White House later saying the investments so far are worth $600 billion. So for more, let's bring in Bloomberg Stuart Livingstone-Wallace. Stuart, I've got to say, in the run-up to this, I thought the whole focus was going to be on deal-making and on those commercial deals. And indeed, we did get a lot of announcements. But then Trump always has the ability to pull out a rabbit out of the hat. And one of the major announcements yesterday that he made during his speech, his very long speech, I should say, was that the U.S. have decided to remove sanctions from Syria. Talk us through that development and how significant it is, you think?
Yeah, I mean, it was quite surprising. It sort of came a little bit out of nowhere. There'd certainly been requests from the Middle East side to do that, but the fact that he announced it there was kind of interesting. Now, a couple of things that need to be said. Number one, let's see how that brief meeting goes today with Syria's president. Number two, let's see just what removing sanctions means. In other words, are they going to do it all in one batch? Are they going to do it piece by piece, confidence building? But I think this speaks to really a vision that is going on in the Arabian Peninsula about what the Middle East should look like going forward. They experienced a very different regime in Syria for a very long time that was pro-Iranian, certainly backed by Iran, and that caused all sorts of problems along with the other proxies in the region. So really what we're seeing is if you lift sanctions, if you can get Syria back on side with the Arab world rather than with Iran, then you can redraw the balance of power in the Middle East, and hopefully you end up with a much more peaceful situation where the focus is on business and economic prosperity. That is certainly the vision of the Saudi Crown Prince, and I suspect shared by many of his neighbors. So really it's a signal for that going forward.
Yeah, and not just Syria. He actually referenced Lebanon many times during the speech, which I thought was quite interesting, saying the new government there has the support of the administration, the Trump administration. Let's just talk about Iran. It was pretty clear from that speech that he does actually want to see a nuclear deal inked with Iran, but at the same time, he also said that if Iran continued to export terror, these are his words, to the rest of the world, then they would have no hesitancy going back to that campaign of maximum pressure. What do you make of those remarks, Stuart?
I mean, I think it's much what we've heard before. Now, the real question is Iran prepared to make the concessions necessary to get that deal done? And in effect, that means shutting down its nuclear program. Now, they have been very, very reluctant to do that because in a scenario which you see today, where the majority of their proxies are very, very weak, and I'm thinking specifically about Hezbollah, I'm thinking about Syria, I'm thinking about some of the militias in Iraq, and Hamas, of course. I mean, it's really the Houthis that are the last ones standing at the moment. So they're sort of, as far as the Iranians can see, their defense mechanism is badly wounded. The nuclear program really is their last card. Do they want to cede that card in return for what appears on the face of it to be some sort of peace deal? And then how do they move forward after that? Because you have to remember Iran's economy is very, very broken. And even if you get some sanctions relief, it's going to take an awful long time to fix some of the very systemic issues that Iran is facing.
What I thought was interesting as well in the speech was he did spend a lot of it talking about how the U.S. views their geopolitical ambitions, their vision for this new Middle East that he talks about, but didn't spend a lot of time talking about Israel or the war in Gaza. He did say Palestinians deserve better, but he pointed the blame back at leadership there. Do you think that the Trump administration is still angling for an expansion of the Abraham Accords, or do they understand that at this point it is going to be quite difficult to get Saudi Arabia to cross that bridge?
I mean, I think a little bit of both. So I think there is a shared vision there in terms of what the future should look like, and I suspect it will revolve around the Abraham Accords in one form or another. And as we know, it's clear that Saudi Arabia was getting pretty close to joining those accords before the war in Gaza kicked off. Now, obviously today it is going to be very, very difficult for the Saudi Crown Prince to join those accords. You know, the public feeling about what is going on is running very high. However, looking forward 2, 3, 5, 10 years, I think there is a shared vision there of what this should look like, and that you can't have endless wars in the Middle East and expect economic prosperity to either return or to continue. So what the signal to me, I mean, beyond the deals, which were very important, you know, they are big economic deals, what the big signal for me was Trump, in effect, showing that Saudi Arabia is sort of, if you like, the undisputed heavyweight champion when it comes to the Arabian Peninsula, and one of its key partners in terms of redrawing the balance of power across the region as a counterweight to Iran, whatever happens with the nuclear talks.
Yeah, and I think that's a really valid point. We're going to bring it up with our next guest, Bloomberg's Stuart Livingston-Wallace. Thank you so much for the setup. Joining us now is Robert Jordan, former U.S. ambassador to Saudi Arabia. Ambassador, it's a really good day to be speaking to you, and you are a man who knows Saudi Arabia very, very well, its transformation over the last 8 years or so. The first question I want to ask you is about the significance of this trip, not just to Saudi Arabia, but to the Crown Prince himself, his evolution as a leader over the last 8 years, and the fact that yesterday President Trump, in a very, very public global setting, lavished so much praise on his leadership and on his economic vision.
I think it's quite significant. If you go back to 2017, when President Trump made his first trip to Saudi Arabia, Mohammed bin Salman was in quite a different position. He has moved on. He has weathered a terrible storm of the murder of Jamal Khashoggi. He has weathered internal divisions within even the royal family, and has certainly taken full charge of the kingdom. We now see a maturing leader and a maturing infrastructure in Saudi Arabia. Their management depth and capacity is dramatically different from what it was 8 years ago. And so we're seeing not simply the emergence of a strong and capable leader, but also the emergence of a culture and a civilization in Saudi Arabia that is going far beyond where they were just a very few years ago.
Yeah. What is the significance of all of those U.S. industry leaders and CEOs also being there for the summit yesterday? I was in the room, and at one point, BlackRock CEO Larry Fink, I thought, said something quite interesting to the audience. And he said, a few years ago, people's perception of Saudi Arabia was that it was an exporter of capital, a big spender, so to speak. But now, increasingly, investors are realizing that on back of these diversification efforts, there are more investment opportunities. Do you think that that kind of perception of Saudi Arabia is likely to become more widespread in the coming years?
Absolutely. The word is out. The Saudis are open for business. They are, frankly, desperate for foreign direct investment. And so part of what we've seen here in this trip is an infomercial, if you will, for what can be done within Saudi Arabia. The Public Investment Fund, their sovereign wealth fund, has made it clear that they have actually had less interest in foreign investment abroad and want to redirect much of their investment internally to Saudi Arabia, partly to develop this Vision 2030. So in some ways, the massive commitment of investment in the United States is a little bit contrary to the overall goals of the Public Investment Fund. But it's quite significant, I think, that President Trump has encouraged this and that even though perhaps the details are lacking and it may not all be realized, there is something really important going on here.
Yeah, I certainly got that sense as well. Being in the room yesterday, it felt quite electric, I've got to say. Let me ask you a geopolitical question, which ties into my conversation with Stuart before you came on. Do you think there is a chance that Saudi Arabia actually joins the Abraham Accords in Trump's term, in this current term?
I would say there's a chance they'll have some form of it. I would call it Abraham Accords light, if you will. There will not be a formal normalization or recognition of Israel, I think, until there is some path forward for some sort of Palestinian entity and relationship. But I think we've already seen, frankly, for a number of years, quiet business being transacted back and forth. There's a tremendous amount of curiosity about what's going on in Saudi Arabia by the Israelis and vice versa for the Saudis. So we'll see some of this. The United States has also included Israel now within the Central Command area of responsibility, which means that militaries can train together, militaries can share intelligence, and so we're going to see some of that, I think, as well, even though it's not widely advertised. So it would certainly be better and preferable to have a formal joining of the Abraham Accords, but we'll see something roughly similar to it. And I think it's also important to remember right now that Israel is not included in the president's agenda for his trip. You might say they're the elephant not in the room. And it's, I think, a sign that President Trump may be wearying of Prime Minister Netanyahu's refusal to take his foot off the gas in going after Hamas in Gaza.
Yeah, so many outlets have picked up on that fact, and also just drawing on the fact that President Trump isn't stopping by Israel on this trip. He also inked the deal with the Houthis seemingly without consulting with Israel. But my question is, are there actually going to be repercussions from the U.S. administration onto Israel, or is this just a small temporary pause in the relationship? Because as we know, U.S. has been a very, very strong ally of Israel and a strong supporter of its military actions in the region.
Part of it depends on President Trump's attention span. He has been, I think, frustrated that his vision for what could happen with Gaza has not only not occurred, but things have deteriorated even further in Gaza. That's something he doesn't really want his fingerprints on right now, and he would rather focus on business deals. He'd rather focus on the positive vibrations that are coming out of Riyadh right now, and leave Netanyahu to deal with Gaza as he chooses. That could change tomorrow. We see a lot of flux in what goes on in this administration, and I think this is not the last time we'll see that.
Yeah. Ambassador, a real pleasure to have you on the show today. Thank you so much for joining us. We appreciate your insights. Robert Jordan, former U.S. ambassador to Saudi Arabia. Still ahead, President Trump again pressuring Fed Chair Jerome Powell to lower interest rates following a softer than expected inflation report. Morgan Stanley shares their outlook next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johannesburg in Riyadh today. U.S. inflation rose by less than forecast in April, suggesting little urgency amongst companies to pass along the cost of higher tariffs to consumers. Rajeev Sibal, senior global economist at Morgan Stanley, joins us now. Good to have you with us. A shame that I'm not in Dubai with you, but let's just talk about the reaction in markets to that major meeting over the weekend between China and U.S. officials. The Treasury Secretary, Scott Bessent, making his way onto Riyadh, and yesterday speaking at the investment forum here, touting the success of the talks of the weekend, talking about this Geneva mechanism and the fact that it's going to de-escalate the tensions between the two sides. Is this a game changer of sorts, do you think, for the markets?
Yeah, I think markets have been right to have a risk-on rally after what we've heard out of Geneva and the negotiations. It's been a big relief to see that the tariff levels are coming back down. They're moving towards a level that we anticipated would be reached in a few months, and so to have it happen more quickly is a very positive step. But I think we also still need to be cautious because there are still tariffs. There were not these level of tariffs a few months ago, and so we're not in the clear. There's still going to be disruption to trade. There's still going to be challenges to supply chains, and companies are going to have to make difficult decisions. But indeed, it is a very positive step to de-escalate and find an equilibrium, if you will, for tariffs over the next few months.
Yeah. I guess as an economist, you have to distinguish between the signaling, but then the ultimate economic impact. And yes, we've had many dial backs or climb downs in the last couple of weeks, those 90-day pause on reciprocal tariffs, the détente with China. But at the same time, if we do end up in a situation where tariffs, baseline tariffs, are still around 10% for many countries around the world, that's still going to hit the global economic outlook, isn't it?
Yeah, absolutely. You know, we are estimating that if you combine the global tariff level of 10% with the Chinese tariff level, you're still in the teens percentile in terms of global implied tariff for U.S. imports. And that will have a disruptive effect on the U.S. economy. The U.S. economy can absorb it. The U.S. economy is coming from a strong place, but the consumer will feel it. Usually it takes about 3 or 4 months for the tariff to fully pass through to the consumer. So that inflation print we got last month is showing that it's not really passed through, but that makes sense to us because it usually takes a few extra prints before we see the tariff come through. So I think it's early days. The price impact will happen over the next couple months. And then the growth impact may take even longer, actually. Historical experience shows us that the growth impact from tariff could take a few quarters, in fact. And so that's why I say, you know, this is definitely a step in the right direction, definitely positive, but we're not clear out of the woods yet. We still have some uncertainty ahead of us.
Yeah. Because of those lags. So the market was quick to price out some of the interest rate cuts that were priced in for this year. I think now we're sitting at around 55 basis points of rate cuts for 2025. Does that sound right to you?
We actually have had a call for a while now that the Fed is going to find it difficult to cut in the next few meetings and perhaps even this side of the year. We had this call as soon as the tariffs started to be discussed. And this goes back to the point I was making just now that usually, historically, what we see is that the price impact comes before the growth impact. And in that kind of scenario, for the Federal Reserve, it's going to be really difficult to look through the uncertainty on the price side. And so we actually will continue to say that the market is probably overpricing cuts. We think that they're not going to be able to cut as much as the market expects because the Fed has to wait, A, for the tariff impact to come through on the prices, and then B, to get through some of these 90-day détentes to make sure that that actually sticks, and that's what the policy is going forward, because they will be concerned about price levels.
Yeah. Yeah. So while you're talking, we're showing a screen up of fixed income yields, bond yields, 10-year, getting back close to 4.5%. But I guess this time you could say they're rising for the right reasons rather than the wrong reasons. Is there any line in the sand for 10-year yields or 30-year yields that once again could prove to be worrisome for investors?
Yeah, I think if we retrace back to the highs that we reached earlier this year, it could be a concern. You know, ultimately the risk-on environment, as you highlighted, helped drive some of the yield curve move over the past couple of days. But I think the other thing we need to be paying attention to is some of the negotiations in Washington, D.C. that are ongoing. The fiscal dialogue in the United States is going to be an important one, and it's going to help determine what the level of the yield curve, where it sets at. And so this is something we're focused on. You know, for now, as you mentioned, this has been a positive risk-on dynamic. But if we retrace to the highs, I will kind of be keeping an eye out, if you will, from a risk market standpoint, and trying to trace what this means vis-a-vis the fiscal negotiations in D.C.
Yeah, it was interesting. When Treasury Secretary was speaking yesterday in Riyadh, he talked about the three-pronged approach of this administration. One of them is tariffs, the others was tax cuts, and then the third was immigration. So to your point, tax cuts is going to be a big focus as we move into the latter half of this year. Rajeev Sibal, Senior Global Economist at Morgan Stanley, thank you so much for coming on Horizons today. Let's take a quick look again at how some of these markets are faring. We saw a boost for Wall Street yesterday, both S&P and the Nasdaq ending much higher up in the green, led by a big rebound in chip makers, Nvidia and AMD leading the charge after those deal announcements came through from Saudi Arabia, which is where we are today. So positive there. And then also you can, not shown on the screen, we did see a bit of a bounce for oil futures as well. So oil jumped about 3% yesterday during Trump's speech when he talked about the potential to reapply maximum pressure on Iran. Now coming up, after Israel's Netanyahu vows to, quote, finish the job of destroying Hamas, we'll be live from Jerusalem with the latest on exactly what that means. That's coming next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Investment blitz. U.S. President Donald Trump and Saudi Arabia's Crown Prince touting a planned $1 trillion of Saudi investment at a glitzy event in Riyadh with $600 billion already on the table. Doha, the next stop on the president's Middle East tour. Trump's Middle East visit also opening a floodgate of AI deals led by NVIDIA. Earnings from China's major tech firms, the next big focus for investors. Plus, President Trump vowing to lift U.S. sanctions on Syria, a boost to the country's ambitions of rejoining the international community. It has just gone 8:30 a.m. across the Emirates, 7:30 a.m. over here in Saudi Arabia. I'm Johanna Versace in Riyadh. We are here for President Trump's visit through these GCC countries, and he's still in Riyadh, expected to travel to Doha later this afternoon. There'll be coverage from there, and then he will make his way onto Abu Dhabi. Already the last 24 hours, we have heard so much in the way of investment, commercial deals inked between the U.S. and Saudi Arabia, and also on the geopolitical front as well. One of the major headlines from his speech yesterday, Trump's speech that is, him announcing that they're removing sanctions from Syria. So a lot that has happened in the last 24 hours. As for markets, well, today futures not doing a whole lot, but we did see green by the end of the day for Wall Street. S&P ended the session up in green, positive territory. NASDAQ fully erasing the losses for the year now, and a big strong rally in chip makers, especially as those headlines started coming through from Saudi Arabia, and that NVIDIA and AMD will be providing one of the Saudi AI investment firms with the chips needed to power their data centers. And then oil, obviously we're here in the region of focus. Brent is back up to $66, slipping a little bit today, but we did jump 3% after some of those comments came through during President Trump's speech, where he suggested if Iran don't sign on to a deal, then they would have no hesitation but to reimpose the maximum pressure campaign and to drive exports of oil down to zero. So that's why you got that reaction in oil. But let's continue analyzing how these markets are doing. Avril Hong is in our Singapore studio as ever. Green on the screen today as well for these Asian markets.
Certainly, we're seeing the climb in Chinese stocks, Taiwan, South Korea, some of it to do with the optimism surrounding Chinese tech earnings, but also the chip stocks in Taiwan, South Korea tracking their U.S. counterparts. So that's where the green is coming from. But you're seeing Japan today a bit of an outlier. So I thought I'd just talk through that, because I think the picture when it comes to earnings in Japanese firms a bit more nuanced. We had the likes of Sony, its forecast missed, but it seems to be buoyed by the share buyback. We also had SoftBank, its profits double. This was more to do with the value of its investments in startups, including ByteDance, just surging ahead. So those are the stocks that are really lifting or helping to cap declines on Japanese indices. But what is interesting that it's still down on a day like that. The Topics, which a day ago was on its longest winning streak since 2009. So to some, this mirrors what we saw in September, where we actually saw a dip in Japanese stocks, and perhaps also a bit of sell the fat going on when it comes to Japanese equities. So thought I'd just highlight that as we get through earnings season as well. Jumana.
Avril, thank you so much. And yes, we'll be looking out for some of those key earnings coming through from some of the big tech names in the region. Now, switching back to this region, Prime Minister Penjamin Netanyahu says he's days away from ordering an all-out escalation of Israel's war against Hamas, saying his armed forces are preparing to, quote, finish the job. Let's bring in Bloomberg's Dan Williams in Jerusalem. Dan, walk us through these comments. What do we make of them, and what exactly is the Prime Minister looking to achieve?
Good morning. Well, these were certainly dramatic statements, but did not mark a change in policy. I think this is a matter of form rather than content, of the timing. It's worth noting that Netanyahu was actually speaking 2 days ago in a closed meeting with wounded war veterans. His office put out a transcript of those statements yesterday, just as Trump kicked off on his Gulf tour. And very shortly before, the Israeli military carried out a large-scale airstrike in the southern Gaza Strip, which we understand was intended to kill the current commander of Hamas in Gaza, a man called Mohammed. If that name's familiar, it's because he's the brother of Yahya Sinwar, the overall head of Hamas, who was killed by Israeli forces in that same area of the Gaza Strip back in October. So it's very possible that the Israeli leader is reminding both domestic opinion and Hamas and the region, and indeed the US president, that Israel remains determined to stick to its war goals and could, in fact, go about achieving them very, very shortly. He's giving a ticking clock to Hamas to capitulate on the issue of hostages, on the issue of surrendering effectively and leaving the Gaza Strip before he says the Israeli military will launch this promised all-out campaign in the Gaza Strip.
There's one line, though, that caught my attention, and that is that he said they are days away from launching this offensive. Does that happen to coincide with the fact that President Trump is in the region these coming days?
Well, absolutely. As you know, Israel formally and publicly authorized this escalation over the last 2 weeks in 2 sessions of its security cabinet. But then we heard that they would hold off on implementation until Trump completes his visit to the Gulf. And since then, there have been developments, the freeing, largely by the officers of the U.S. president, of a hostage, an American-Israeli hostage. Israel sending a negotiation team to Qatar to see if they can revive truce talks, hostage talks. So what Netanyahu is saying is, look, even if there is a slight delay now, even if we won't go all out on Friday when Trump completes his mission, we're still prepared to do it in very short order in the very near future, meaning effectively Israel wants to see a breakthrough diplomatically very soon, or otherwise it will resort to military force.
Bloomberg's Dan Williams, thank you so much for the reporting. It looks like we really are entering into a critical couple of days when it comes to Gaza. Now, Elon Musk says Saudi Arabia will authorize the use of SpaceX's Starlink service for aviation and maritime shipping. He announced the news at a summit held in Riyadh, which is where we are, attended by dozens of U.S. executives. Starlink is SpaceX's growing Internet from Space initiative that consists of thousands of satellites in a relatively low orbit around the world. Microsoft is planning to axe about 6,000 jobs to reduce management layers. The company says the cuts amount to less than 3% of total headcount, including LinkedIn. About 2,000 workers will be impacted at Microsoft's headquarters in Washington, with terminations expected to start from mid-July. And up next, we speak to the CEO of Fertiglobe about their first quarter results and their growth strategy targeting $1 billion EBITDA by 2030. This is Bloomberg.
Next week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum starts Monday, right here on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh today. President Trump and Saudi Crown Prince Mohammed bin Salman have announced a pledge for $1 trillion in commercial deals at their summit in Riyadh. Amongst the agreements is Saudi Aramco's plan to spend $3.4 billion on its Motiva refinery in Texas, the largest fuel-making plant in the U.S.
One of the investment that we are signing today is an expansion on the refinery to make it more integrated with petrochemical. We're putting $3.4 billion in that refinery. The U.S. today, in terms of gas, is almost 100 billion of sales gas. So, and it is continuously increasing. So the gas is available. It's at a low cost. So we're looking at expanding in LNG.
Bloomberg's Anthony DePaula joins us now. Well, Anthony, talk us through that investment announcement from Aramco. They're looking to invest $3.4 billion into this refinery in Texas. Is that a significant amount? Is that a sizable investment?
Yeah, good morning, Jumana, and glad to see you there out of Riyadh with that big event yesterday. But yeah, I mean, you heard the two main points from the Saudi Aramco CEO there: the investment in the refinery and the fact that they want more LNG. And yeah, $3.4 billion is a sizable investment to put in on a refinery, and that is an expansion of the current refinery. So what they want to do is extend that to add petrochemical capacity. This is something that we've seen Aramco doing a lot of at a lot of their facilities. They're buying into facilities in China mainly and adding integrated refinery and petrochemical. And then they've got a bunch of refineries in Saudi Arabia where they want to add petrochemical facilities there as well too. And so what that basically does is it keeps production of fuels like diesel, gasoline, jet fuel, but it diverts some of the extra liquids that come out of that refinery into a chemical cracker, uses that feedstock to create other products like chemicals that can go into plastics, can go into finished consumer products, and feed these downstream industries. So Aramco really sees chemical demand growing much more quickly than road fuel demand over the coming decades. So they see that as a place to invest in the future. As you said, that refinery there is already the biggest one in the United States, over 600,000 barrels a day on the U.S. Gulf Coast. And so they are going to be expanding that to add some chemicals at that facility. A big investment. We're waiting to see details on when and how, Jumana.
Yeah, interesting. It speaks a lot to Aramco's broader strategy, but then also, I would say, a little bit surprising given the cyclical headwinds that have been facing the chemicals industry recently. On the energy side of things, I know we've talked a lot about other commercial deals, but there was also an MOU signed, a partnership between the U.S. and Saudi Arabia. What do we know about that MOU? Can we expect any more deals between Saudi and the U.S.?
Yeah, we saw mention that Saudi Energy Ministry and the U.S. Department of Energy would cooperate on deals, lots of technology and information sharing. So we know that there are things like carbon capture that both countries are looking at. There are partnerships between U.S. and Saudi companies already. So Exxon, for example, is an investor in a refinery in Saudi Arabia. We did see already also this morning an interesting but somewhat vague statement out of the Australian gas company Woodside. They've got an LNG export facility in the United States, and they talked about some additional cooperation or an MOU about potential cooperation there. So that will be interesting to watch and see if Saudi Aramco does try to take some LNG supply from that facility. We have already seen Aramco sign deals. One of them is a firm deal for supply from 2 LNG export terminals in the United States. And Aramco wants to get into LNG. Again, as I said, they see that chemicals demand growing much faster in the future, and they also see gas demand, so LNG demand growing in the future, and they want to get the supply of that fuel and be able to ship that around the world. So they are also developing an LNG trading arm in Aramco Trading. So it's kind of a complex and connected business strategy that they've got there, getting into that U.S. supply and exporting it around the world. And of course, that is one of those things that we heard about yesterday, all these deals that Trump wants between the U.S. and Saudi and other Gulf countries as well. So big developments there, Jumana.
Yeah. Deals. So many deals announced yesterday. It's difficult for me to keep track, even being on the ground. Bloomberg's Anthony Zapala, thank you so much. Now, ADNOC-owned Fertiglobe has reported first quarter revenue of $695 million. That is up 26% year on year, with a profit of almost $73 million. So joining us now is CEO Ahmed El-Hoshy. Really good to have you with us on the show. Talk us through the earnings and where some of this strength is coming from, sir. Good to have you with us.
Good to be on, Giovanna. Yeah, we had a solid set of earnings reported yesterday after market close. We basically enjoyed higher urea pricing this last quarter, which supported our results. We also held back some volumes in late Q4. We saw a bit of a softness in the market, so the commercial team wanted to hold back some volumes. We did, and we got the benefits of that with higher volumes at higher prices in Q1.
How do you see the outlook for this year for global ammonia and nitrogen prices? There's been so much volatility in nat gas prices recently and in the energy space more broadly. How do you see the outlook for 2025?
I mean, we still continue to be positive on the outlook. It's hard to kind of say where it is month to month, but we see tight supply-demand dynamics on the urea fertilizer side. We've seen very solid application. And even in the U.S., we've seen a lot of demand, a big increase in pricing. where the farmers are trying to get more fertilizer up into the Midwest to apply it, due to good grain pricing. And also we're seeing we've seen very little exports out of China. So we haven't seen in the last 18 months exports of urea out of China. So there's been a little bit less supply on that front, a good demand in the Northern Hemisphere, and the Southern Hemisphere will start picking up here in the next few months. So while month to month is hard to predict, we continue to see, tight markets there.
And in terms of your production outlook, would you be looking to expand in other hydrogen products away from ammonia, for example, sustainable aviation fuel and other potentially different products?
Yeah, so we actually also yesterday announced our Grow 2030 strategy, where we gave kind of a 5-year outlook to increase EBITDA by 60% at 2024 pricing. One of those areas is to look at tangential opportunities in the ammonia sector. So we're not necessarily going all the way to aviation fuel just yet, because it's a bit of a longer chain, and with that, not something we could explore, but we are looking at low carbon ammonia. We're the first producers of green ammonia in the Middle East, but we're looking at a little bit cheaper options like blue ammonia and low carbon ammonia expansion opportunities, both in Texas as well as in the United Arab Emirates here in Ruiz.
Interesting. Talk to me about your green hydrogen project in Egypt. Where is the financing for that project going to come from? What's stopping you from making the final investment decision in Egypt?
It's a good question. Given green ammonia is more expensive, we wouldn't take this project forward without offtake, and we were able to secure a green ammonia offtake under a subsidy program with the German government last year. We won that in an auction, so we see enough upside on price there to be able to justify the extra cost, and then we'd get financing from multilaterals, including the EBRD, if we're able to achieve a final investment decision later this year. That's a small project, around 70,000 tons. Larger projects are going to be more blue or low carbon related, and those are ones we're evaluating with our partners, Japanese and Korean players here in the UAE, as well as Exxon in Baytown, Texas.
Since you bring up Korea, I'm curious to see whether you're looking to get involved in both the clean and the dirty tenders in the Korea auction later this year.
So from our side, from an ammonia perspective, we're actually just potentially participating in the clean tender for blue ammonia to be co-fired in power plants in Korea. So that's the only one that we're participating in as Fertiglobe.
Ahmed El-Hoshy, thank you so much for coming on our show today. We really appreciate it. The CEO of Fertiglobe, walking us through the results and some of the drivers of those strong results. Thank you so much for coming on. Well, coming up, the World Bank says Nigeria could boost tax revenues if the country lifts its high tariffs and import bans, potentially reducing poverty by an estimated 2.6 percentage points. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Riyadh. Lifting Nigeria's high tariffs and import bans could significantly increase tax revenue for Africa's most populous country, the World Bank has said. Such a move would also lower poverty rates by an estimated 2.6%. For more, I'm joined now by Bloomberg's Ondiro Ganga from Kigali, Rwanda. Ondiro, well, tariffs, this time we're talking about the effect that the tariffs imposed by the government of Nigeria has had on the economy, and the World Bank's feeling towards them. They would perhaps prefer to see those tariffs removed.
Absolutely, Jumana. And when the government was imposing these tariffs, they had a couple of goals in mind. One was to protect local goods, boost local production, and also increase the contribution of manufacturing to the GDP. That's why we saw these tariffs on construction material, on food items, and also medicine. But there are a couple of factors that the government didn't put in place. One of them is the fact that Nigeria has porous borders, also corrupt government officials, and so these goods are being smuggled into the country. Also, cost of production is another factor. If you factor in energy, volatile currency, inflation, these goods cannot compete with cheaply imported Chinese goods. And also, Nigeria is a big market, 200 million people. They cannot produce enough to sustain the demand, hence the need for importing goods into the country. And that's what the World Bank is saying, that by imposing these tariffs, they're losing up to 66% of revenue that they would have made from tax. It's hiking inflation by about 5.8%, hence the need to wipe them off, and as a result, they could be able to reduce poverty by 2.6%.
But at the same time, the World Bank seems to be quite optimistic when it comes to Nigeria's growth prospects. Can Nigeria sustain this momentum with so much global uncertainty right now?
The ball is fairly and squarely in the court of the government in Nigeria. It depends on how well they implement fiscal policies. They have a big budget this year, 55 trillion naira, and they pegged oil revenues at $75 per barrel. We've seen fluctuations in the oil prices in the international market, $65 per barrel. This means that they will be losing $10 for every barrel. And what this means is that they're likely to have a huge budget deficit. Development spending is going to take a hit, but also the central bank might not have enough reserves to buffer the currency that has begun showing some signs of stability. On the other hand, the World Bank has given a thumbs up to the central bank. They're happy with their tightening spree. And even though they paused in their last meeting, when they sit next week, it's highly unlikely that they're going to cut, because inflation is expected to go high due to Trump tariffs and also softening of the naira. In general, you have these Washington-based think tanks and also Bretton Woods institutions very happy with the reforms of President Bola Ahmed Tinubu 2 years into his reign. But these reforms, which are on track, are yet to reflect in the pockets of the ordinary Nigerians.
Bloomberg's Ndiro Ganga, thank you so much for the reporting there. Well, you may have noticed, Horizon viewers, that I'm not in Dubai. I'm in Riyadh today. I was here yesterday, and I have been here all of this week because we are tracking President Trump's whereabouts, and he is expected to today continue his trip in Riyadh, expected to be presiding over a GCC leaders meeting of some sort. Unclear at this point who exactly will be attending that meeting, but it's also notable because yesterday the focus was on those bilateral deals, the investments, the commercial agreements signed between Saudi Arabia and US, and it seems as though today's focus is going to be a little bit more on regional security. We got a much better understanding of how the Trump administration is thinking about some of their geopolitical objectives throughout the course of his next term. So look out for headlines today, anything on Iran, Gaza, potential detente in the region, and more support that he pledged yesterday, especially with that major announcement of the U.S. deciding to remove sanctions on Syria. So a lot is happening here. We're going to keep you posted over the next couple of days. Just before we leave, a quick look at equity futures. Not doing a whole lot, but we did see a big bounce in markets yesterday. Chip makers leading the gains. Why? Saudi Arabia, Nvidia and AMD are going to be selling some of their chips to some of the AI centers here. That gave a boost to the Nasdaq. That was it for Horizons Middle East and Africa. I'm Johanna Bersetchi in Riyadh. Stay with us for Daybreak Europe.